Hello, everyone. You're now tuned in to the most powerful financial podcast on the planet, the Millionaire Millennial. I am your host, Stack Banks, and today I am just recording a quick little 20-minute session of the podcast and going to have it up hopefully on all platforms here in just a little bit. But I've got a loaded month coming for you guys with some guest speakers and other CEOs who are going to be on the podcast. So I just wanted to take a quick, brief moment and talk about some things I see going on in the news cycle. One of them being Bitcoin and Bitcoin's volatility. The halving is coming up. Some of you may already think it might have happened. I don't believe it is. Or actually, I take that back. I do believe it might have occurred. Once again, within this podcast, I've said it many times, this is not financial advice. It's not meant to be taken as financial advice. It's a starting point for your guys' education on various subjects if you want to explore that. But in my personal opinion, I believe this is just the start of where we're seeing Bitcoin and the Bitcoin price go. I'm a big firm, as many of you may know, I'm a big believer in the Web3 and crypto space, obviously having a company in the space myself. And I'm not going to show you anything, but I don't think that this is the top of Bitcoin at all. I also don't think that, for those of you that are worried, you keep seeing the pricing on Bitcoin, it went up. I believe that was in October or November. It went of 2023 from about $13,000 a coin all the way up to, it's now roughly, I'd have to pull up my Coinbase or Crypto Bubble account, but somewhere in the neighborhood, I believe, of $63,000 a coin, something like that. Let me see. I'm pulling it up as we speak. And so you're talking, last price, $66,700 roughly dollars. So there are those of you who have seen, $43,000 gain on your Bitcoin. And I don't personally think that's the high. I mean, it's gone up even higher than that, up to I believe around 73,000 or so. But it's something that I don't think we've seen anywhere near the top of Bitcoin personally. I think it's here and it's going to be here for a long, long time. I don't think institutional investors like BlackRock and Valkyrie would be buying it up if it wasn't beyond just its own utility and my personal thoughts and opinions on it. But I think people are just now starting to learn about it and get a handle on it and coming to understanding what Bitcoin really is and what the Web3 and crypto space means to a lot of people, or will mean to our society as a whole, humanity as a whole. But that's a discussion for another time. Just wanted to talk to you guys very, very quickly about that. I know a lot of people have probably seen with the, I'm trying to remember off the top of my head, the Ponzi papers. I forget the gentleman who set himself on fire, but there's a gentleman, those of you who don't know, there's a gentleman who set himself on fire, I believe a day ago, in front of former President Trump's criminal trial in New York City. I believe it was in New York City. And he was a journalist of some type, and he had released or had a website called the Ponzi Papers. And there was a lot of people who read those, and he basically outlined his thoughts, saying that crypto is the biggest Ponzi scheme ever and all these things. And I personally read through some of it. I didn't read through all of it. And I don't want to call him disturbed or manic because I don't know him as a human being, but reading through some of that stuff, I think he's someone who was experiencing some type of manic episode. And I think to go set yourself on fire, you're probably going through some type of mental health crisis. And I'm not trying to shame him or anyone who does have mental health issues. If you do, please see a mental health professional. But I think a lot of what he was thinking or seeing comes from these suppositions that And I'm not saying that there isn't like a grand world cabal and order that's, made up of the elites who are orchestrating the economies of the world and all these things, and all these things are a Ponzi scheme, and et cetera, et cetera. That's what he was alleging. I don't agree. I think there's too many moving parts, and I don't want to go into that by giving it power, but I do know that a lot of people are probably very concerned by it and are going to look at what happened and say, well, what about this, that, and the third? I don't think crypto is a Ponzi scheme. At some point, I will go more into that and why. And if it was, I believe it's gone too far out of control for it to be one. And I believe the markets have evolved to the point now where compliance is becoming integrated to into the Web3 and crypto space. And because of that, even if it was something that started maliciously, it is getting to the point now where it doesn't matter, because there are good actors in the space, and the good actors in this space are bringing compliance to the forefront in order to protect investors and in order to protect um, interested retail and institutional investors in the space, and to make sure that Web3 fulfills the promise that it has been teasing to us since its inception. So I actually didn't start this episode out to talk about the Ponzi papers or crypto or anything like that, or my interest in them. The main focus of this episode today, on April the 22nd of 2024, I wanted to talk about gold and what's going on with gold, and to maybe help give you guys some insight into why people buy gold, why the price of gold is going through the roof right now. It's hitting all-time highs, record highs, and to maybe give you guys an understanding of those marketplaces and how they relate to the other marketplaces, right? So some of you might not know, but the United States and no other country on planet Earth currently has a gold standard. You hear a lot of people talk about a gold standard. We should go back to a gold standard. The gold standard was the gold standard, blah, blah, blah. The gold standard, I believe in, let me look this up here. I believe the gold standard was abandoned in, let's see, off the top of my head. I don't really know. Who was, I know Switzerland was the last country to have a gold standard. I don't remember exactly when they gave it up. I believe, let me see here. Yeah, and it says Switzerland is one of the top countries with the largest gold reserves, and was the last country to eliminate its connection to the gold standard. In 1999, the country voted to sever ties between the country's currency and gold, meaning the Swiss franc need not be backed by gold. So 1999. Sorry for that, you guys. Took me a minute to find that information for you, but there's no country on planet Earth whose currency or fiat currency, paper money, is backed by gold, meaning countries do not shore up large amounts of gold and then the value of their dollar is based on how much they have. That's how the gold standard used to work, right? So as of 2024, none of the world's countries use the gold standard. A bunch of them did in the past, and the gold standard essentially was just a monetary system in which the value of a country's currency, like the US dollar, the British pound, was tied to the value of a specific amount of gold. It was originally conceived as a way to stabilize prices and prevent inflation, because paper money was actually backed by physical gold held in reserve. And the gold standard was officially adopted in 1812 by the United Kingdom. And then other countries followed suit, the United States, Germany, and France, and all those in, I believe, 1870. And while the tethering of paper money, it was meant to make the tethering of paper money to real world gold reserves was meant to make the gold standard more stable. I think most economists today would argue that it actually failed doing that. Moreover, the gold standard actually reduced government's flexibilities when reacting to economic changes because they couldn't increase, this is just for example, they couldn't increase the money supply to increase employment during a recession. And that rigidity proved particularly problematic back in 1914 with the outbreak of World War One, and that threw a ton of countries, financial systems into chaos and forced a lot of them to abandon the gold standard in face of consumer concerns and economic instability. And then evolved variations of the gold standard with slightly less strict connections to real world reserves were adopted by several countries in the 1920s. However, few of those systems lasted through the Great Depression or World War II. Today, global gold production would likely be unable to keep pace with economic growth, and it just makes the gold standard in general just impractical for today's modern era, right? Because you have certain companies like say Apple, right, who are going on $1 trillion net worths, right? If you're a company or a country, that doesn't have $1 trillion in gold reserve in order to print the money and back the money, those companies can't even reflect their true net worth, right? And that would be problematic not only for these companies but for your country and all that across the board. Okay, so so gold is no longer used as a currency, a form of exchange. More often than not, typically today, and this is just me sort of speaking casually to you guys and filling you in, more often than not, you see gold being used as sort of an inflationary, what would you call it? An inflationary to something that you use to combat inflation, right? Like if you have a bunch of fiat currency and you realize, as most people do, that fiat currency is losing its value over time. Like you look at the US dollar, I think just in the last 2 years it's lost something like 26% of its purchasing power. You take a bunch of this cash that you have and you buy gold, and that's sort of your hedge against inflation devaluing your dollar, right? Because if the price of gold is going up, or you're hoping it will, I think a lot of institutional investors saw gold as an undervalued asset. And that's where I think where you're seeing a vast majority of the gold price spike coming from is institutional investors essentially parking money and trying to keep it safe, right? Because an investor, what they want to do is make money. They don't want their money, I mean, it sounds simplistic, but they don't want to lose money, right? So if the markets are slow, right? I mean, even though crypto, which is typically not something institutional investors are investing in, you see a lot of them taking monies and putting it into ETFs. So what's an ETF? A lot of you are probably wondering what an ETF is. So that's called an exchange traded fund. So in order to hold gold or silver or steel or Bitcoin or whatever, a lot of people don't want to physically hold it, right? So if you're someone that you want to invest in gold, but you don't want to put a safe in your house and have a bunch of gold bars that you have to worry about, you buy an ETF, which essentially means that you have through some fund or whoever, some institutional investor is essentially saying, here's an ETF, it's your IOU, saying that we have a gold bar with your name on it, or a sliver of this gold bar has your name on it, and this ETF is actually your ticket to that or whatever. Typically people don't cash them in. I don't know of anyone ever doing that. I'm sure someone probably has. Same with Bitcoin, right? The Bitcoin ETFs. It's something that an institutional investor like BlackRock's Bitcoin ETF, BlackRock owns the actual Bitcoins themselves. The ETF is their offering of those Bitcoins to people who want to buy the ETF, okay, without actually holding the actual physical, well, digital, physical, whatever, Bitcoin. So I think a lot of institutional investors took fiat money that was being destroyed essentially by inflation and went and parked it into gold. And that caused a squeeze, that caused the price of gold to go up, right? Because you have momentum. Some of you who don't understand what I'm talking about, a lot of times when you see a stock, and this is not across the board, but stock or an asset where there's a lot of hype and you hear the public behind it, or like with the Bitcoin, or excuse me, with the Bitcoin, with the gold, I believe most of the gold was bought up through these ETFs. A lot of investors were looking around and trying to figure out, what am I going to do with this money against inflation? And they went and bought a bunch of these ETFs, or I'm sure some of them bought some physical gold, very, very few of them. And that was their hedge against inflation. Now, because you have the hype behind it of other traders, these guys talk, and funds can be monitored. You can see what they're doing. I think a lot of funds, those who were late to the party still got into the party type thing. And now the consumer and retail investor is seeing the effects. That's where you see a lot of these jewelry companies where they have old stock, old rings and things that have been sitting around. They're now selling it. They're taking the diamonds out of them and melting the gold down and selling the gold off, because gold's at an all-time high. They can make more money doing it than they would actually selling it as a piece of jewelry. Some of these companies, some of them don't want to do that. Luxury goods, I know the markets are starting to turn, especially look at the watch markets, and maybe that might not be reflected, but I know in the secondary market, especially being in the jewelry industry myself, I see a lot of companies that hold a lot of stock and were buying and selling these Rolexes and APs and Pateks and things at these record prices. Once the watch market went soft, a lot of them have been held, or are now currently holding inventory or chains, or pieces of gold or things like that. So I think a lot of them are eager to get out of it. So not to get too far off into the weeds into the jewelry industry, but they are related. So I think quick stat that you guys have to know: 50% of all the gold out there is being bought in India and China. It's being sucked up in those markets, and two-thirds of those markets, that gold is being bought in jewelry form, and 1/3 you're seeing in gold coin and bullion and bar. And so it's something that I believe, with the institutional investors sucking up a lot of the gold, buying up a lot of the gold, and then you have just gold, you have the effect of the psychological effect of gold. There's a lot of people who wear it simply as adornment, right? And there's a lot of people who made money through COVID and during COVID and beyond it, right? Who have spent and taken a lot of that cash and parked it into jewelry. And some of them are having to sell it off and lose money and whatnot, but others have not. And it's driven, I believe, the price of gold up. All those factors combined. And then you also have the institutional investors buying up gold and just creating the scarcity from that as well. So I don't believe that's every factor affecting the gold price. I do believe that's some of the main factors that are causing the price of gold to skyrocket as it is. Hopefully this will serve you guys well and is valuable to you guys, my viewers and my listening audience out there on the internet. Right now we're approaching 20 minutes on this cast, so I'm going to cut it short, but I did want to let you guys know who are listening. We're going to have a couple different CEOs on the podcast here in the next couple days and upcoming weeks, and I'm excited. I won't tell you guys who they are yet, but they are some very large names and people that you guys more than likely already have heard of. So please be on the lookout for that, and then check us out. We'll be releasing episodes usually every week. There'll be at least 2 episodes up that are short format, and then we're hoping to get up to 3 or 4 episodes where we're bringing on other CEOs and founders and you guys can get some value out of that. So until then, and until next time, please follow us on Instagram, Spotify, Google Cast, Apple Podcast, wherever you guys consume your media, and also YouTube at Stack Banks is the YouTube channel. And within that, there should be a section that says The Millionaire Millennial. And then we are at the Millionaire Millennial Podcast or Millionaire Millennial Podcast on Instagram, and that will have all of our social media links as well. My name is Stack Banks. I'm at stackbanks.official on Instagram. You guys can check out all the things I have going on, and there are links in my bio there as well. And until then, I appreciate you guys. Hopefully this has been something that has brought you guys some value and will continue to bring you guys value and inform your decisions in the future. Until then, be good to each other. I appreciate you all and value your listenership. Until then, Stack Banks and the Millionaire Millennial out.